Should you invest in SBI multi-cap fund? Will it help you create wealth in the long run? What kind of value it is going to add to your investment portfolio? Hi, this is Ramalingam from holisticinvestment.in. We help individual investors like you to take right financial and investment decision so that you can reach your financial goals faster and smarter. In order to decide to invest in this fund or to avoid this fund, we have to understand what is basically a multi-cap fund, and then the basic details and structure about SBI multi-cap fund. Then we have to understand what are all the pros and cons of investing in this fund. Then we can decide who can invest in this fund and who should avoid this fund. What is a multi-cap fund? A multi-cap fund is a type of mutual fund in which the collected money from investors will be invested across different market capitalization. It will be invested in large cap, it will be invested in mid cap, it will be invested in small cap. Fine. And SEBI has given a mandate for this. This fund should invest 25% in large cap, 25% in mid cap, 25% in small cap. Over and above this, the balance 25% can be invested in any of the capitalization or in any combination of these three capitalization based on the fund manager's outlook. As we have understood the multi-cap fund, we can go into the details of SBI multi-cap fund. This SBI multi-cap fund NFO is open on 13th February 2022 and the NFO will be open till 27th February 2022, and immediately on March 8th the fund will open for regular purchase and repurchase, and there is no entry load for investing in this fund, and the minimum investment for this fund is only 5,000 rupees. What is the investment objective of this fund? The investment objective of this fund is to provide investors with opportunities for long-term growth in capital, long-term capital appreciation. How? From a diversified portfolio of equity and equity related instruments invested across market capitalizations. This is the investment objective of this fund. Then what is going to be the investment strategy of this fund? This fund provides a diversified allocation across market capitalization as per SEBI mandate. Then this fund will look for viability of the business than the sector of operation. This fund will choose the bottom-up approach. They will give importance to the company and then the importance to the sector, not the vice versa. The top-down approaches first analyze the sector, understand the outlook of the sector, then in that sector choose the good stock. It is not that way. It is actually choosing a good stock and then looking at the sector. This fund focuses on more undervalued stocks, uses active stock selection, not a passive fund like an index fund. No, this is an active stock selection fund. They can have 10% exposure to real estate investment trust as well. As we have understood the basic details of this particular fund, we can analyze this fund by doing a simple comparison on the advantages and disadvantages of this fund. What are the potential merits of this fund? This fund eliminates the sector bias because this fund is not focusing on top-down approach, it is focusing on the bottom-up approach. So there is no bias towards any particular sector. No. This fund can align with your long-term goals because The aim of this fund is to provide long-term capital appreciation. This fund has got the privilege to invest across different market caps like large, mid, and small. So it can give you a better diversification, and if one cap is not doing well and the other cap can do well, so that advantage, that privilege can work in your favor through this SBI multi-cap fund, because they are spreading across multiple capitalization. The basket is wide, so the fund manager can do a decent amount of diversification here. Compared to a small cap and mid cap fund, this fund will also have exposure to large cap. So risk quotient wise, compared to a small cap and mid cap fund, this fund will have lesser investment risk. Obviously, this fund aims for long-term capital appreciation because of the stock market investment, any equity investment, right? We should give enough time. It is an open-ended equity fund investing across market capitalization, so we should give enough time. When I say enough time or long term, what is mean by long run, right? 7 years is a long term. Within this 7 years, market can go up, market can go down, market can give negative return, market can give positive return, market can give no return, market can give less return, market also can give very good return. So in which combination it is going to come, we don't know. That is why we are simply investing and staying the course for 7 years time frame. So if an investor could wait for 7 years plus time frame, this fund has got the potential to deliver inflation beating returns. Yes, it is possible. We have seen the potential merits of this fund. Now is the time to look at the potential demerits of this fund. Because they are investing in large, mid, and small, this fund may over diversify in more number of stocks. Because of that, instead of just diversification, it can over diversify, which can lead to dilution of overall returns. In this particular fund, what kind of fund management style they are going to apply is something we have to find out. Are they going to follow the value philosophy? Are they going to follow growth philosophy? Are they going to follow buy and hold, or are they going to follow momentum strategy? All these things we have to wait and see, because this is an NFO. We don't know what is the style the fund managers are going to apply in this fund. That we have to wait and see. This fund is not having a track record, being an NFO. Because it is not having a track record, it is difficult for any analyst to analyze this fund and find out whether this fund is worth investing, how this fund has performed during different phases like market crash, market correction, or market recovery, or when market touched all-time high, how the market has performed. It is difficult for anyone to analyze because it is not having a track record. Because there is no track record and we are not able to analyze, we are simply taking a blind risk by investing in this fund. We are not taking a calculated risk. Also, we are not having any idea about the stocks to be selected. If it is an existing multi-cap fund, it will have a portfolio. We know what kind of sectors they have given allocation, and in each and every sector, what kind of stocks they have chosen. Everything will be available. So we can evaluate the portfolio and have an outlook on the fund. It is not possible in this NFO because it is not yet created any portfolio. Not having track record, not having an existing portfolio to analyze. So we are taking huge blind risk without doing any basic analysis. So we have understood the advantages of investing in this fund, disadvantages of investing in this fund. So in a nutshell, do I have to invest in this fund or I have to avoid this fund? That is the question in front of us, right? So it depends on what kind of investor are you. Yes, if you are a conservative investor who's investing for a serious financial goal, like meeting your kids' education, your retirement, like that, then in that case, instead of investing in this fund, you can choose to invest in existing multi-cap funds which have a track record for 7 years or 10 years. That will give you an idea to analyze and take a decision. If this fund, after some point in time, creates a portfolio and creates a consistent track record, then it may be worth considering this SBI multi-cap fund that point in time, not during this NFO period. Because without proper portfolio and consistent track record, we will not be able to do any research. Without that basic research investing in any fund, it is blind risk. It is better to avoid taking blind risk and we can take calculated risk. If you are an aggressive investor and you have spare money and you want to experiment in this fund, then in that case you might try with a minimum investment in this fund. If you have any specific question related to this fund or any of the investment options, then in that case I would strongly suggest you to book a free appointment with our financial planners. The registration link for the same is given below this video. Would you like to attend insightful investment webinars? Yes, we organize regular investment webinars. The registration link for the next webinar is given in the description box. You can feel free to register for our next webinar. Last but not the least, please subscribe to our YouTube channel so that you will not miss any of our future videos. Bye.